Hey everybody, in this video I'm going to give you my workings and reasoning why I believe Tesla will become such a large company over the next 3 to 4 years. If you don't want to listen to me ramble on, use the chapters below to skip to the interesting parts, but if you want to check out my understanding, let's get through the whole video together. But first, this is not financial advice, it's merely my opinion. So, how have I approached this? Well, I focused mainly on the automotive business and just valued Tesla on car sales and robotaxis. I've also run a few scenarios which I believe could play out. Why have I left out the energy and insurance business? Well, I personally feel that I need a few more quarters of data on the energy business to make a realistic valuation to that part or that segment of the business. And I think that these next few quarters will really show the growth in that area for the next 3-4 years, and energy will start to become a meaningful part of Tesla's business. The insurance business, well, as I've covered in another video, yes, it will provide a good amount of money to the likes of me and you, but in the grand scheme of things for Tesla, well, I don't think it's that great of a deal in honesty. I could be wrong, and if I am, that's just upside to my forecast. So, let's go with a pessimistic case in my eyes first. But before I give you the answer, the share price that you're all after, let me just talk you through a few key elements that make up this model. First off, those values that are in yellow are inputs that I've typed in manually. Those values in blue are calculated numbers, so this number times that number, for example. Then those in green are the outputs or the important numbers to look at. In this case, it's the profit made from selling cars, the profit made from running the robotaxi network, and what that equates to as a market cap. So, in this scenario, as I'm going to call it the pessimistic case, we hit 920,000 deliveries in this year, 2021. There are no robotaxis ever, so they don't solve full autonomous driving, but they continue on their mission to reduce the cost and accelerate the shift to renewable and cleaner energy. How realistic do I think this actually is? Well, if we just take the production ramp of some of the factories, I think that it takes a little bit long in this scenario, as the ramp of Austin and Berlin, which are due to be complete over the next 3 to 6 months, will ramp production at a much faster rate than I have here over the next 2 years. Also, the actual vehicle average selling price, which in 2025 in this scenario is at $35,000, well, that could be on the low side, as the price of FSD is currently at $10,000 on its own to buy. But they're going to be moving to a monthly subscription over the next few months as an option for people to take up. By the end of 2025, I personally believe that Tesla will be producing and selling around 6.25 million cars to the general public, with none of those being used as robotaxis at all in this scenario. What does this mean as a share price for this scenario? Well, I personally think that it will mean a share price of $2,861 by the end of 2025. And that's just for the automotive part of the business, excluding all the good work that's going on the energy and storage side of things. What does that mean if I was to buy at today's price? Well, it means the price would increase by nearly 300% from the $720 it is today. Okay, so let's have a look at my base or central case. My most likely case, let's call it. In this scenario, I believe that the leaked internal target of 1 million vehicles produced and sold this year will be hit. I genuinely think that the 500 cars they fell short of, the 500k last year, will be avenged. Now, I am a Tesla bull, but bear with me. Interestingly, in this scenario that I've modelled, the actual vehicles sold to customers or the general public in 2025 is lower, as Tesla begin to focus on their robo-taxi network, and also because FSD is solved in this scenario, autonomous driving, so the value and therefore the cost of a Tesla vehicle to a customer jumps, so less are actually sold to the general public. Now, the revenue numbers do take a jump up from here on in. Let me just take a moment to run you through my thoughts on the mechanics of how the robotaxi will work. So, I'm assuming an 80% margin for robotaxi revenue. And in this scenario, saying that Tesla will start to produce compact cars in 2024 and keep them all for their own network of robotaxi. Tesla have already mentioned last year that they plan to make the compact vehicle in 2023, but I've assumed some delays here as we're on Elon time at the moment. They'll begin charging $1 a mile, with 60% of the travelled miles being billable. This cost will start to decrease by 15% a year as more supply of robotaxi become available and the market in certain cities starts to mature. This doesn't kick off until 2024, as due to regulation and legislation reasons, it might take a few years to actually get it all approved. There might be a few pockets of robotaxis operating in test cities and states like Florida, Texas, and Vegas potentially within the next probably 2 years, but it'll only be a few thousand robotaxis initially. All of this means that by the end of 2025, the share price could be in the region of $7,263, basically a 10x from where we are now. Right, let's move on and have a look at my optimistic view of the auto business for Tesla. Get ready for some probably big and what some people say is unrealistic numbers. Now, I personally believe by the end of this year, Tesla will start to realise some of the FSD revenue that's been sold and is sat on the balance sheet already. I also think that throughout the course of next year, 2022, there will be a large uptake in the FSD monthly subscription package as people will start to see the real value from it. So in this model, I've broken out the robotaxi further into two elements. I've added the ability for customers who have bought a Tesla to put it to work in the robotaxi in the platform that Tesla have created when they're not using it. Now, I'm not saying that everybody will do that, as some people won't want other people sat in their car. They just want their own car to themselves, which is fully understandable. What I've said is that the margin that Tesla take on the revenue that those miles do in customer-owned cars is 30%. That's like what Apple take as a fee in the App Store. Now, I could have put that in as 50%, like what YouTube take for AdSense on videos. But I think that Tesla are not trying to make masses of money when they get to that stage. Their mission is to move the world to being more environmentally friendly. So, what this means is that by the end of 2025, Tesla could end up with nearly $125 billion of profit from their robotaxi element of the business alone. Now, I'm applying a PE ratio or multiple to that, as if you look at Amazon, they currently have a PE of around 80 at the moment, but have slightly lower margin on their cloud or AWS business segment compared to the 80% modelled here in the Tesla robo platform. The long and short of it is that by the end of 2025, Tesla could be worth, in this bullish scenario, nearly $15 trillion in market cap, which would be a near 20x on today's current price. By 2030, that could be somewhere in the region of $35 to $36 trillion of value. Me, personally, I think Tesla will be worth around $5 trillion in market cap, so around $5,000 a share by the end of 2025. That is a whole 25% higher than Cathie Wood and ARK believe the price will be in 2025 of $4,000. But I also think that next year, ARK Invest will come out again with a revised price target. Just remember, this is my views, not investment advice. I hope you found this really interesting. I'm personally interested to hear your point of view on the models that I've just shown you. I'd love for you to tell me why my inputs are wrong, so drop them in the comments below. If you've enjoyed this video, drop it a like and subscribe, as it does help the channel out. But until next time, stay safe.